Akeso has emerged as a standout performer in China's biotech recovery, delivering a remarkable 154.7% return this year and crushing both healthcare benchmarks and the broader market. The numbers tell a compelling story. Akeso's 154.7% gain dwarfs Cure's 38.3% and the Hang Seng's 26.7%, showing investors are rewarding execution over promises. Two bispecific antibodies drive this success: cadonilimab and ivonescimab, both delivering clinical differentiation that sets Akeso apart from competitors. Three pillars support Akeso's strategy. Inclusion in China's national reimbursement drug list opens market access, tight cost control preserves margins, and maturing global partnerships unlock international growth. Analysts have recalibrated their forecasts, revealing an interesting split between near-term caution and long-term confidence. Revenue expectations for 2025 dropped from 5 billion to 3.56 billion yuan, yet 2027 forecasts hold steady at 8 billion, suggesting slower ramps but unchanged conviction in the growth trajectory. What changed analyst minds? Clinical differentiation in tough patient populations and a clear path to profitability shifted sentiment from skeptical to constructive. No investment comes without risks, and Akeso faces several worth monitoring closely. 5 risk factors converge on execution: global commercialization challenges, limited pipeline depth, regulatory uncertainty, pricing pressures, and fierce competition could all temper the upside. The biotech capital compass brings together science, strategy, and market insight to help investors navigate this complex landscape. The newsletter's next deep dive examines FDA leadership instability following key departures, exploring what this means for drug approvals and industry confidence. Leadership changes at the FDA ripple outward. Drug development timelines stretch, oversight becomes less predictable, and investor confidence wavers as regulatory decisions face greater scrutiny. The biotech capital compass serves active investors, swing traders, and biotech enthusiasts seeking sharp analysis and actionable strategies in this fast-moving sector. The newsletter delivers market insights to 3 audiences: active investors managing portfolios, swing traders hunting opportunities, and enthusiasts fascinated by breakthrough therapies. Starting January 2025, the newsletter moved to a premium model, inviting serious biotech investors to access deeper analysis and strategic guidance. Author Hartaj Singh brings over 30 years of experience across drug development, hedge fund management, and biotech analysis, offering battle-tested insights from the front lines. This analysis builds on previous coverage from November 2024 and March 2025, tracking Akeso's evolution from promising contender to market leader. The coverage journey began in November 2024, spotting early recovery signs, deepened in March 2025, highlighting strategic momentum, and now, in August 2025, confirms dramatic outperformance. Over 8.5 months from mid-November, Akeso delivered 127.2%, while Curry returned 31.9%, and the Hang Seng gained 30.8%, extending the performance gap even further. This performance gap reveals a key shift. Investors now reward innovation-led Chinese biotechs that deliver clinical progress, global relevance, and near-term commercial execution. Reaching profitability stands as a central pillar of the investment thesis, following the playbook that drove long-term returns at Vertex and Regeneron. Akeso mirrors the Vertex and Regeneron playbook, balancing commercial execution with disciplined spending to build sustained profitability that creates lasting shareholder value. Management ties together 3 elements. Commercial execution drives product revenue, disciplined spending preserves margins, and licensing deals provide additional support to build operating leverage through 2026. Recent forecasts reveal how analysts adjusted their expectations, showing a clear pattern between near-term pullbacks and long-term stability. The 2025 revenue forecast dropped from 5 billion to 3.56 billion yuan, yet 2027 expectations hold firm at 8 billion, Analysts see slower launches but maintain confidence in the long game. Operating profit forecasts mirror the revenue pattern. Both show near-term cuts but robust long-term targets, suggesting analysts believe Akeso manages costs effectively despite flatter launch curves. With revenues down, the critical question becomes how well Akeso controls costs while preserving its capacity to grow. R&D spending tells a story of timing, not retreat. Cut by nearly 1/3 in 2025, but rebounding by almost the same amount in 2027, showing thoughtful recalibration rather than permanent pullback. Current R&D spending sits well below the 2027 plan, demonstrating that Akeso defers rather than eliminates investment while managing near-term cash flow prudently. Meanwhile, selling and administrative spending edges up modestly, a rational move in China's competitive market where field force productivity drives market share. Akeso walks a fine line between short-term discipline and long-term growth investment, and early signs suggest the company is doing so quite well. The timeline to profitability has accelerated beyond initial projections, reflecting improved execution and cost control. Profitability could now arrive as early as 2025, sooner than the original 1 to 3 year projection from November 2024, showing accelerated progress toward this critical milestone. Growing visibility around profitability ripples outward, driving strong stock performance, boosting investor confidence, and setting the stage for multiple expansion as Akeso transitions from R&D story to earnings generator. Akeso achieved substantial commercial momentum in 2024, with market access expanding and revenues accelerating from its cornerstone products. Commercial sales hit 2.5 billion yuan in 2024, up 25% year-over-year from 2023, demonstrating strong commercial traction. Both cadonilimab and ivonescimab secured NRDL inclusion starting January 2025, a critical market access milestone that significantly expands patient reach and hospital coverage. A strategic 54% price cut for cadonilimab in mid-2024 directly facilitated NRDL inclusion, showing how aggressive pricing unlocked the critical reimbursement listing. Hospital coverage is expected to reach 2,000 facilities by year-end 2025 under new commercial leadership, expanding market penetration well beyond current levels. Beyond its two cornerstone products, Akeso advances a highly diversified pipeline with significant global potential across multiple therapeutic areas. Cadonilimab drives an extensive clinical program with 28 ongoing trials across 20 indications, including notable potential in non-small cell lung cancer. Phase 3 data show cadonilimab outperforming competitors, especially in PD-L1 low and negative patient populations where other therapies struggle. Ivonescimab spans over 27 clinical studies across 18 indications, backed by a global partnership with Summit and Pfizer, plus combination trials with antibody-drug conjugates. A head-to-head study showed ivonescimab beating pembrolizumab in first-line PD-L1 positive lung cancer, delivering superior efficacy that could drive competitive advantage. The pipeline extends beyond oncology. Ligufalimab leads as the first global Phase 3 CD47 antibody in solid tumors. Ibronucimab won approval for cholesterol disorders, and both ebdarokimab and gumokimab await review for psoriasis. Critical clinical and regulatory milestones in 2025 and 2026 could drive further value creation and investor interest. The 2025 catalyst timeline unfolds in waves: mid-year Phase 3 readouts for ivonescimab in lung cancer, second-half top-line data for manfredokimab in atopic dermatitis, Harmony-2 progression-free survival data likely at ESMO, and continued global trial initiations in colorectal, pancreatic, and resistant lung cancers. Looking to 2026, Akeso anticipates global Phase 3 trials maturing and potential new approvals in liver cancer and broader immunology assets, extending the catalyst runway. Analyst perspectives evolved dramatically through 2025 as Akeso delivered on critical approvals, partnerships materialized, and commercialization efforts intensified. Early 2025 caution over revenue shortfalls and high R&D costs flipped to mid-year optimism driven by clinical successes and NRDL inclusion. A sentiment reversal fueled by execution. Three positive developments converged to improve sentiment: significant clinical successes, NRDL inclusion for market access, and heightened optimism around a potential Summit AstraZeneca partnership for global commercialization. Analysts maintain a balanced view, acknowledging Akeso's competitive strengths while remaining mindful of the risks ahead. Akeso's competitive position rests on three strengths. Bispecific antibody leadership provides clinical differentiation, NRDL inclusion enables market access, and strategic partnerships facilitate global expansion. Yet two concerns temper enthusiasm: short-term margin pressures from pricing dynamics and pipeline concentration risk from heavy dependence on core assets. Key opportunities center on strategic partnerships that provide validation and resources, plus international expansion that diversifies revenue and reduces China-specific risk. Five challenges converge to create threats: intensified Chinese biotech competition, regulatory risks across jurisdictions, pricing pressures in multiple markets, and overseas execution uncertainties could all limit upside potential. Analysts predominantly use discounted cash flow models to value Akeso, incorporating key assumptions about growth, risk, and long-term commercial success. The DCF approach branches into three components: a 2.5 to 3% terminal growth rate, a 9.4 to 10% weighted average cost of capital, and sensitivity analyses that test varied assumptions about risk and return. Global clinical partnerships directly link to risk diversification, enhancing transparency and capital access, while helping mitigate ESG and policy headwinds for China-based issuers. A comprehensive glossary covers the technical terminology, from NRDL and NSCLC to DCF and WAC, ensuring readers can follow Akeso's business, clinical programs, and financial metrics.